Project, which is determining financial penalties for banking violations. My mentor is Rodi. So the points that I will be talking about in this presentation will be about the SEC or the people behind these crimes, the ones that prosecute these crimes. And then I will talk about my question and then answer my question. And then I will have an example of a case that I have worked with pulled up. And then I will have a slide where I talk about how the SEC or the prosecutors could make improvements to the system so then less crimes like these would happen. Introducing the laws, which is the SEC. The SEC, or the U.S. Securities and Exchange Commissions, is an independent agency of the United States federal government created in the aftermath of the Wall Street crash of 1929. The primary purpose of the SEC is to enforce the law against market manipulation. Other issues that are being dealt with by the SEC are misrepresentation or omissions of important information about securities, manipulating the market prices of securities, stealing customers' funds or securities, and or violating broker-dealers' responsibility to treat customers fairly, insider trading, such as violating a trust relationship by trading on material, non-public information about a security, and selling unregistered securities. The DOJ, such as the United States Department of Justice, also known as the Justice Department, is a federal executive department of the United States government tasked with the enforcement of federal law and administration of justice in the United States. It is equivalent to the Justice or Interior Ministries of other countries. Some issues that the DOJ deals with are cases like white-collar crimes, which are non-violent crimes often characterized by deceit or concealment to obtain or avoid losing money or property, or to gain a personal or business advantage. Criminal activities such as public corruption, such as breach of the public's trust by government officials who use their public office to obtain personal gain, money laundering, corporate fraud, securities and accommodations fraud, mortgage fraud, and the financial institution. Differences between these two departments is that the DOJ deals with crimes more broadly related to money crimes in general, while the SEC is dedicated to money crimes within businesses. One of the laws that I will be talking about will be the FIRREA, which is the Financial Institutions Reform, Recovery, and Enforcement Act of 1989. It established the Resolution Trust Corporation to close hundreds of insolvent thrifts and provided funds to pay out insurance to their depositors. It transferred thrift regulatory authority from the Federal Home Loan Bank Board to the Office of Thrift Supervision. It dramatically changed the saving and loan industry and its federal regulation, encouraging loan organization. BSA, Bank Secrecy Act, a U.S. law requiring banks in the United States to assist U.S. government agencies in detecting and preventing money laundering. Moving on, answer the question that I will be talking about in my presentation. So, after all, how do we determine the financial penalties for banking violations? Well, in order to form an answer to this question, we need to know who and what department is prosecuting the company, under what law or crime they are being accused of, if they are convicted, accused, charged, or others, how much they are being charged with, and why they are being charged that amount. To answer that question, the amount being charged can be determined by considering various economic damages, such as medical expenses, lost wages, and out-of-pocket expenses from the injury, in which examples are shown in each case that was covered, which we will cover the Wells Fargo case in this representation. But in another example, which is HSBC, a bank, the damages that caused this amount to be charged, which is 1.256 billion, and they were being charged this amount because they were violating BSA, which is around $1 million, IEEPA $300,000, and TWEA, which is $1 million. Then multiplied to the official price due to additional crimes like insolent transactions on behalf of clients. The next example is Wells Fargo, in which they had to pay $3 billion in result of deferred prosecution agreement. The damages that caused the amount to be charged was because of 12 USC section 81833AC. FIRREA imposes civil penalties ranging from 1.1 million to 5.5 million per violation, or in the amount of violators' gain or the victim's loss in this case. I'd assume that Wells Fargo has been doing this for a few years before getting caught, meaning the violation would have occurred more than a few times. And so Section 10B of the Exchange Act, $25 million. Rule 10B5, they're under $5 million plus FIRREA, which is about $333 million, and the distribution, which is $500 million to investors, leads to the final bill paid to the SEC of $3 billion. And talking about the case, not that long ago, on February 21st of 2020, Wells Fargo agrees to pay $3 billion to resolve criminal and civil investigations into sales prices involving the opening of millions of accounts without customer authorization. Along the lines below, $3 billion payment result of deferred prosecution agreement in criminal matter, settlement of civil claims under FIRREA, and resolution of SEC proceedings, directly stated from the SEC. As said, Wells Fargo violated FIRREA, and it was a resolution of SEC proceedings. This was because Wells Fargo had been pressuring employees to meet unrealistic sales goals, which led to employees making false records and unauthorized customer accounts. Wells Fargo admitted that it collected millions of dollars in fees and interest in which the company was not entitled. They had also harmed the credit ratings of certain customers and unlawfully misused customer-sensitive personal information too, including customers' means of identification. Because of the regulations of the FIRREA, which were supposed to prevent Wells Fargo from using customer information for their benefit illegally, this law can now be used against Wells Fargo in court. From the SEC, Wells Fargo has violated Section 10B of the Securities Exchange Act of 1934, the Exchange Act, and Rule 10b-5. These laws state that Section 10B of the Exchange Act and Rule 10b-5 prohibit material misrepresentation and misleading omissions in connection of the purchase or sales of securities, according to the SEC. All these events, sooner or later, led Wells Fargo to a big downfall of losing $3 billion. But in a way, this could have been prevented from happening. Would it have been better if the employees had refused to use the information of customers illegally, exposed the company of the management, company's administrators, and led to a prevention of the cost of customer losses? So, how to improve? And these are the recommendations that I have made, and so I'd give in order to have less cases in crime. The first example I will talk about is increase in securities. For customer protection, it should be required for companies under suspicion for customers to increase security measures by either implementing multi-factor authentication, examples such as when Google sends a push notification to people's phones to ensure it is actually that person logging in, and biometric authentication, fingerprint scans. Although most major companies are already using these types of authentication systems, it would help prevent people from trying to do illegal things if it required more authentication. The next thing that I will talk about is mandatory reporting. We could also suggest mandatory reporting, as in someone like the customer relationship manager who would check through company earnings and see if they match customer spendings. These reports will be saved on paper if the customers aren't really spending that much, or if the company is suddenly making anonymous money, it can then be calculated as to where the money is going and coming from. Another case of this could help with money laundering too, where someone like the foreign exchange transaction manager could report to the government monthly on money being exchanged in and out, which countries or place, etc. This way, we can use these methods and improve the government spend system for the better, so that cases like these have less chance of happening again in the future. Lastly, something that can help improve the system would be incorporating AI systems. The issue with having a watchdog or whistleblower in a company is someone could take the position too seriously or slip and allow illegal things to happen if they are getting a cut. This is just human behavior. With AI, the company won't have to worry about sabotage either, since AIs are trained in technology in order to help the company, and unlike humans, they don't get paid. The treasurer could use the AI to run an analysis on points of sale and be hooked up with all the company's technology. This way, it would be easier to collect and calculate things such as customer transactions, company sales, money exchanges, etc. Sort of like a record tracker, the AI connected to the company's technology can keep track of each customer's accounts and how much they are spending within the company. It can calculate if the company's sales are increasing or decreasing to prevent a case like WorldCom from happening again, which is another example that was not shown in this presentation. AI has become more popular over the last few years, and it is becoming used in many different industries. If the business is worried about these crimes happening, they could potentially look into AI systems to run analytics checks, and it could be trained to look for errors, suspicious activities. Companies stand to benefit significantly as they employ AI to reduce lead time, uncover fresh customer insights, revolutionize customer service standards, and deliver unparalleled personalized experiences. And that is how I will wrap up my presentation. My email is located at the bottom of the presentation, and thank you for listening.